Thanks for joining. Today we have Carol Pope here with us from Empire Home Loans. She's going to be focusing a little bit on manufactured home loans, but we're really excited to hear what she has to offer us today. So without further ado, I am just going to pass the floor right on over to Carol.
Thank you so much. So for those that don't know, Empire Home Loans is a broker. I'll explain a little bit more about that as we go. I am going to go ahead and share my screen, as I do have a PowerPoint that will help you to follow along. So can you see my screen?
Yep.
Okay, perfect. So I'm going to talk about manufactured homes, and I'm going to talk about all of the types of financing for manufactured homes. I know many of you might know that I do homes in parks, and that may be how you heard my name, because I'm one of a few that actually does those. But we're going to talk about kind of all of the different programs. I've been in the business here in Puget Sound since, what time we got there, 1995, doing home loans. Had my own brokerage for a while. I've been a manager of a couple big box companies, and I'm a broker again because of the flexibility and the breadth of products that I can offer as a broker. I'm also licensed in Oregon, Arizona, and California, and can offer all of these programs there as well. So basically, most of the programs that we offer, the manufactured home has to be built after June 15th of 1976, which is pretty standard, and has to comply with HUD standards. There will be HUD tags on the homes. If it's a single wide, there'll be one tag. If there's a double wide, then each section will have a tag. And then there's also a HUD label that's inside. We don't need these for park homes, but we do need them for every other type of program that we have. And if they're missing, there's actually a website, and I can provide that information later, that where you can order these online. So if for some reason you can't find the HUD tags, or that label's missing and you have to have it, you can actually still get verification that it was built after June 15th with those HUD tags from their verification center. So conventional options. Maximum loan to value on a conventional loan for a manufactured home is 95%. I know there are conventional 97% loans, however, not for manufactured homes. You have to have a minimum of 5% down. They do have a minimum square footage of 400 square feet. If they're smaller than that, that makes them what's called a park model, which means they don't have a HUD tag, and they have a vehicle title, and they will never be title eliminated. So smaller than that, that's the reason why there's a restriction on the size. Conventional does not allow for an investment property. It only allows for a primary residence or a second type vacation home. And you can do a cash out refinance on a manufactured home, but you're limited to a 20-year term, and you can only take 65% of the value. I have seen a lot of homes in some areas here in Washington that are in condo associations rather than just regular subdivisions. And we actually can finance a manufactured home condo. A lot of people are like, I've never heard of that, but it basically is the same as any other type of a condo. We can do a spot approval or a single conventional type approval with a Fannie Mae loan, and do a regular plain old vanilla conventional financing for that. I have seen very few, but I have seen a few condo associations that are manufactured homes that are actually FHA approved as well. So if they are, then those are even easier. FHA and VA. So there is also a square footage size for VA. I think FHA has eliminated their requirement for a minimum size. The difference with the government loan versus a conventional loan is that we will require a foundation inspection to certify that it is on a permanent foundation that meets HUD guidelines. Something that you don't know about VA loans, and this goes for all VA loans, not just manufactured. If a VA loan or a home that's going for VA financing does not have an appliance in it, it can still be financed VA. VA only requires that if you have appliances in the home, that they have to be in working order. So a lot of times if a stove is missing or a fridge or something, it's not required in a VA property to have any appliances in the home. The other things that we'll look for with FHA and VA are the same with any other home. We're going to look if there's a well, septic, all those normal kind of things with normal properties. You're still going to have the same requirements on the FHA VA manufactured home that you do with a regular home. I know there's no questions because there's hardly anyone here, so I'm going to keep going. And if you do have questions later, you will have my contact information. Feel free to reach out anytime if you have a property and you'd like me to take a look at it and see whether it would go one type of financing or the other. I'm happy to do that for you. For USDA loans, most lenders will only do manufactured homes USDA if they're brand new, but there is an actual pilot program that is allowed for the state of Washington, and we can finance on a USDA loan a manufactured home that's been built on or after January 1st of 2006. They do have a minimum credit score requirement of 620, whereas VA and FHA have no credit score requirement. It is for a purchase or a rate and term refinance only, and the borrowers must meet income limits for the area like any other USDA loan. USDA will also have a requirement of a foundation cert and does not allow for any alterations with the home. Now, when we talk about alterations, I probably should have brought that up earlier. Let's say that there's a conventional FHA or VA home and there's an addition that's been added to the manufactured home, maybe a covered or not covered, but an enclosed additional room. Those would have to meet state requirements, and you would have to have a labor and industries L&I inspection by the county or the city, whichever is the jurisdiction for that property, and they would have to be approved by them. And basically what they're looking for is confirmation that by adding that, it has not damaged the integrity of the original home. So it does require an L&I inspection if there's been an addition or an alteration to the home. Let's see, and in all of these cases, the homes have to be title eliminated. Title elimination means that when you buy a manufactured home, they're actually technically vehicles at first. So they have a vehicle title, and title elimination means that you're eliminating that vehicle title and you're titling the home as real estate and titling it as real property. So it's being taxed and treated as real property. That's what title elimination means. So if you hear that term, that's what they're referring to. On a VA loan, we will allow a home to have been moved more than once. Again, it just simply needs to be on a permanent foundation and have that foundation inspection. So VA home loans, we can do manufactured if they've been moved more than once. We also offer construction loans. So on our construction loans, we can do manufactured, regular stick built or manufactured, but we can do manufactured construction loans on FHA, VA, USDA, conventional, and on our portfolio product. So our portfolio product will actually allow you to place a manufactured home on private land that you own and not require necessarily that it be title eliminated. So there are some cases where a family member has property and they want to put a manufactured home on it for children or for elderly parents that they are going to care for, and they can actually add that as long as we have the permits from the county, and it wouldn't necessarily have to be title eliminated and treated as real estate. And that just depends on the county requirements. Because if the county requires it, then we'd have to do that. The other thing we offer, as I said, was portfolio loans for manufactured homes on their own land. So minimum 5% down with no mortgage insurance. The homes still have to have been built after June 15th of 76. These, however, I'm limited to a maximum loan term of 25 years. They can be single wides or double or triple wides, and they can have been moved more than once. So this is an option for somebody to buy a home that's been moved more than once, that is not a veteran, that it does not have VA eligibility. Again, these still have to be primary or second homes. If it is a second home and you own another property, then you will be required to put a minimum of 20% down. These programs do not allow for cosigners, at least not this portfolio program, does not allow for a cosigner to qualify. And everybody who's on the loan has to intend to occupy the property as their primary residence. Same with cash out refinances on this type of property, we can still go to 65% and limited to a 20-year term. If a borrower has 10% or more down, then they can potentially finance up to 3% of the closing costs. And that's just based on whether they can qualify to finance those. So if they qualify for the payment, they can technically finance up to 3% of the costs. Again, we can also do a brand new home placed on its own land. and do that as a construction loan under this portfolio program. We can also take and do a used home and move it to a new location and put it on a piece of land with this program. So it doesn't have to be a brand new home. A brand new home could fall under our regular construction program, whereas this program will allow the home to be a used home that's also been moved. We do have another program that we just added, and that is for older homes, homes that have been built prior to 1976, and also for investment properties. So we can do a manufactured home for an investment property. However, the house has to have at least 30% down in order for us to do that, and it must be title eliminated, and it must be on a permanent foundation. If it is a double wide, the maximum loan term will be 20 years. If it's a single wide, it would be 15 years. This particular program doesn't care if the home has been moved before. It can be owner occupied, second home, or investment property. So it's an option if you've got somebody looking to buy an investment property, and it happens to be a manufactured home. We can do that under this portfolio program. The one I get a lot of calls on, especially because of the price points right now, are manufactured homes in parks. These are technically personal property loans. They're not mortgages. There are no down payment assistance programs for these because, again, they're not a mortgage. You're buying the home and not the land. We can, again, these still have to have been built after June 15th of 1976, and I can do a loan term up to 25 years. We only require 5% down, no mortgage insurance, because again, they're not mortgages. These homes can have been moved more than once. They do not require that they have the HUD tags on them, and most often they are missing. We can only do these, as I said, primary and second homes. Again, if you own another home and you're buying this as a second or vacation home, we do require at least 20% down. No co-signers on this program. This is the same portfolio lender as the one I spoke of earlier. And I can actually do a cash out refinance for a home in a park up to 65%. However, the condition on these is that it cannot be more than 20 years old at the time that it closes. So these are a little trickier. I can still do cash out, but they can't be, I can't go back to June 15th of 76. They can only be 20 years old. This is another one, 10% down. The borrower can finance up to 3% of the purchase price. Rates on these are different. Again, it's a personal property loan. So these rates are more impacted by what the feds do every day. They don't change every day like mortgage rates. They change every time the Fed plays with the prime lending rate. Currently, rates haven't changed since the last increase in the rates by the feds. And rates are determined for a borrower with their down payment percentage and their credit score. We use Equifax only for these, so we're only pulling a single bureau, and they have to credit qualify a little bit differently. These are manually underwritten. There's no automated underwriting system for these. So they're very, very tricky when it comes to looking at credit. They want to see some credit depth. So if they only have credit card history, if they've got good scores and maybe at least 10% down and a good rental history that we can prove, then oftentimes they'll approve the loan. Typically, they like to see at least 24 months worth of an installment loan history and more than just credit cards. The other thing for a home in a park is that you're not going to have a title insurance policy. These are transferred using a vehicle title. So just like the sale of a car, the vehicle title is actually transferred after the closing of the sale. We do use an escrow company still because there's a loan, but we do not have title insurance. Vehicle taxes and homeowners insurance are collected in the monthly payment, and the borrower has to qualify using the park rent as well as the payment. So that's another big piece, because I've seen park rents go from, I think the average used to be about $550 to $650 a month, and I see them now up to $1,200 a month. And that really can impact a person's buying power. So, and that's pretty much it for manufacturing. I mean, that's kind of it in a nutshell. I know you may have questions. Feel free to reach out anytime. As brokers, we offer quite a few other products. We do all of the conventional VA, FHA, USDA, jumbo stuff, but we also do a lot of out-of-the-box things. We do investment loans using what we call debt service, where the rent payments would cover basically the cost of the mortgage on a monthly basis. And so we're not looking at a borrower's income in any way. We're just looking at, does that home that they're buying, if they're going to rent it out, would it cover the payment? We can do fix and flip loans for investors. We can do construction loans for builders. We can do horse farms and agricultural loans up to 100 million. Bank statement loans, where you have your self-employed borrowers that write everything off, so tax returns don't look so great. But if you take their last 12 months bank statements and we look at the cash flow, we can actually come up with an income that could potentially get them into a house sooner rather than later. Anything that you can think of, if there's a unique scenario, we do some light commercial. We definitely do non-warrantable condos. So if you have a property out there and you want to see if it's financeable, just shoot me a message, shoot me the property address, and I'm happy to do some research. And that's pretty much all I have for you today. Here's our contact information. And again, feel free to reach out if anything comes up that you have questions about and that we can possibly help you with.
Awesome. Thank you very much. Hold on one sec while I finish writing down your contact info, just so I can send it out to our brokers. But I think that's super informative. And I think there's a lot of different, not only just different options, but like different things that you can run into when purchasing a manufactured home that you don't necessarily always see when you're just talking about regular residential home, what we see most of the time with just a conventional.
Yeah,
so I think that's really interesting. I think a lot of people are interested in doing manufactured homes, like you were saying, like maybe building one for a mother-in-law suite or something like that. So I think we'll probably see a lot more of this.
Yeah, and especially with the price points, I see a lot of the homes in parks. In fact, I am really shocked at how many parks are out there in Washington State. I started doing these about 9 years ago, and I did probably one of these a quarter, and I'm doing now about 7 to 10 of these a month because of the price points. And I've just definitely been really surprised at how many of them are out there.
Yeah, definitely a lot. And I think, yeah, like you were saying, like the price point, I think can be really beneficial for those people that are like looking to get into a home, want something that's more of a home feel, but maybe can't necessarily want to bite the cost of like a big night or like a just the same size house, just not a manufactured home.
Yeah.
So I think that's like, I think it's a really good option. I think you have a lot of different options that are available, which can be really helpful to those buyers for sure.
Yeah. So if anybody has any questions, that's what we're here for. Help provide education and find resources for you to make more deals.
Awesome. Love it. Well, thank you very much for joining us today, Carol. I really appreciate it. If anybody has any questions, I will include her information in the recap email that I send out. So I will make sure to include all of that, and I'm sure we'll have a couple agents reaching out to you with some questions here pretty shortly.
Totally my pleasure. You guys have a great day.
Yeah, you too. Bye, Carol.
Bye.